Hello, it's Rhonda Thomas, and we're ready to do part two for the problem 4-5A that is part of the Cengage project. Cengage project. Okay, so let me go ahead and share my screen. And when we left off with the last video, we had just put our unadjusted trial balance into my Excel spreadsheet that I provided for you in the module on Canvas. Okay, so now let me pull this back in here. All right, so here is my unadjusted trial balance here on the right. I have put that in the unadjusted trial balance and it has came out okay. So like I said, if you're not getting a right number, you need to go back to your ledgers and figure out what went wrong. Okay, because we are now ready to go to step 4. So we finished 1 through 3. Now we're going to do an adjustment. Then we're going to use that spreadsheet. Then we're going to journalize and post the adjusting entries and then prepare an adjusted trial balance, which this spreadsheet will help with. This spreadsheet will help with the unadjusted trial balance, the adjustments. Okay, so just so you can remember what this looks like. And you can use the functions in Excel. You just have to know how to do it. You're going to have to get a total down here. You can use the Alt key and the plus sign, and it'll go up just so far. But then you got to go ahead and extend it on up and make sure it goes all the way. And then once you have put that formula in, you can just go across here because you're going to need formulas to add up all these columns here in just a little bit. So if it were me, I would go ahead and get that in because that's just going to save you some time. Okay, so we're getting ready to do these adjustments and we're going to figure out what gets debited, what gets credited. We're going to use our T accounts for that. Then we'll have an adjusted trial balance, and then we'll see what numbers wind up on the income statement and what ends up on the balance sheet. And then we're going to use these to help us with the rest of this. Okay, so I'm going to make that go down. Here is my T accounts. Now, I need to real quick put the totals in my T accounts. Okay, so if you'll give me just a moment, I will do it. And you can do it too if you want, if you're using it. So let's go ahead and total. So if I want to total what is in here, I'm looking for a debit total, and I am going to use this, and I'm going to do a calculation. So I'm going to equals the sum. So I'm going to add up what's on the debit side, sum of, and put parentheses around it, minus the sum of, so minus sum. So I'm going to add up everything that's here to that. Okay, yes, and it'll help me. Okay, so one more time. How did I do that? I typed in sum, and then it'll open parentheses and let me click and drag. Let me just go on down here. It will click and drag to where I want it to, and then I'm going to subtract the credits. So that is if you look at the trial balance here, end of period trial balance, I have $31,080 in my cash account, and that is the unadjusted. So, okay, so now we go to accounts receivable, and let me see if I can copy this. Okay, this will work, I think, for anything that's a debit, and I want that. Yeah. Oh, no, it doesn't like it. So I'm going to have to, well, I could do it. But anyway, let's just go ahead. I'm going to go ahead and do that real quick, and then I'll bring you back in. I forgot to do that because I want to, and we also have to put the information in the ledger too. Well, I like to keep track of things that are going on in the, okay, so I'm just going to go ahead and do this. Try to hurry up. And you can watch me if you want. So because that is, we're going to close parentheses and we're going to subtract sum, open parentheses. I just recommend using that whole area, close parentheses. There it goes. And then to let your brain know where that is. Wait. Yeah. Okay. So I need to change where this is. So hold on. I like to put, draw a line for an equal sign, kind of, right? Drawing a line there. So I know that's the balance. Okay. I know that's the balance there. Cash won't get adjusted. But I'm just gonna go with that. All right. So, all right. Rent, rent is okay. It's gonna get one. Supplies has a balance. And this one we just need to add up on this side. So it just depends on what you have. Okay, so let's just get that. Okay, so we want to make sure prepaid rent, prepaid insurance, office equipment. Okay, yep. All right, payable. Now we want it on this side because it's got a credit balance. So we're going to just, and we don't have to do a sum. We can just pick because there was only two. So accounts payable has 1,300. If it has a single amount, you can just go with that. Okay, so common stock is good, retained earnings, fees earned is all going to be on the right because, okay, so we're just going to add all these up, equals, and you can get that by, you can get this automatic sum by holding down your Alt key and pressing your plus equal sign at the top of the keyboard. So, but I want it to stretch all the way up here so I don't miss anything. 42,000. So then we need a balance in the expense account. And we'll need a balance in our miscellaneous also. Okay, there it is. Okay, so I think we've got our balances. If I've looked at it right. The hardest one was cash because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 transactions caused cash to either go up or down of those 21 we did. Yeah, that's a busy cash account. Okay. So our next step is to evaluate the adjusting entries. Adjusting entries. So we're going to use these right here to help us with figuring out what needs to be debited and what needs to be credited. So let me put this on here. Pull this down. Okay. And then we bring this over. Okay. All right, so here I'm going to continue reading from my sheet. We're going to the general journal. So I'm going to get rid of my unadjusted trial balance. I want that general journal. Okay, and I don't want that. So there it is. So we just need the general journal and the ledger. We need the general journal and the ledger because we're going to post to the ledger after we do all of the, well, no, I'm going to do it after, just like I have been. I like to post after my journal entry. I don't like to wait because the accounts are not affected until the entries are posted. All right, we've got the first one, and these will all be dated July 31st. Okay, July 31st. So let me move this a little bit over. All right. So let's go down. So 1, 2, 3, 4, 5, 6. And I'll use the letter that they have instead of the number here. So we know what went where. And then we're also going to use the spreadsheet to put in those adjustments also. Okay, so we know what gets debited and what gets credited. All right, so I know I'm kind of making you do double duty here, but it's worth it because if you make an error, then you have something to look at to try to figure out what's happening. So we'll fill this in when we get done. Let's just go back to what we were doing. So let's go down to the journal, and this is going to be page 1. So I had to start over again. Yep. So I'm sorry, my journals are not, but I am going to this one. I am going to this one. This says adjusting entries. Yeah. So my ledgers are not going to be right because I haven't posted all this. So I'm going to have to depend on these. Yep. So I'm glad I did that. All right, let's go with July 31st. First entry. Okay, first entry says insurance expired during July is $385. So here's insurance. Okay, and we want to make this go down. So there's so much that expired. Mine is 385. This is going to be A. Okay, and then I need to go to insurance expense. And this is going to be an A and 375. All right, so now let's put it in here. Okay, so now we want insurance expense 385. And we want prepaid insurance to go down, which is an asset. So there we have it. Now we've got to go down to the ledger to put these in right now. Gosh darn it. All right, it's okay. I'm going to go ahead and keep going with it, but here is what I'm relying on for my ledgers now, because I don't have time to go back through this and do this right now. So, okay, we want prepaid insurance to go down. So that's going to be here. And that's coming from page 3. And that's going to be the debit. So I guess I could go, no, I'm just leaving it alone. I'm just putting it in here. That gummit. I may have to. I just hate to have to do this again because Cengage timed me out and it didn't save. All right, that's fine. So once again, we're going to be relying on this. So then the insurance expense. Okay, we didn't have anything in it yet. Yeah, we're putting insurance expense in as a debit, and we're crediting the prepaid insurance 385. Right? So this is going to be July 31st from page 3. The adjusting entries are on page 3, and this is 375, so 375. Okay, 375. So let's go back up and put our account numbers in so that, sure, I got this. Yeah, account numbers in so that they know we've posted it. So insurance expense is, oh, I got to do my chart of accounts. Insurance expense is 55. Okay, so 55 goes in here. And then prepaid insurance is an asset, so it's going to start with a 1. I went past it. 15. Okay. So gosh darn it. I hate the fact that those journal entries aren't there, but if you watched it on the video, all right. So now we're getting ready to do another adjusting entry. So let's go get these done first, and then we'll fill in our spreadsheet. All right. The next one says insurance, no, supplies on hand for July 31st are 1525. All right, so I'm going to have to go to the supply account, which is right here, and I'm going to put in the fact that the new balance in here is 1525. Okay, so this is the ending balance. E is for ending balance. So how much went out of here? Okay, so if you have this much left, but you had this much when you did the adjusting entry, then let's take this amount and subtract what we still have in the account, which is 2175. So supplies is going to go down 2175. We had to calculate that. That is B. Okay, so then when we credit supplies, we will debit supplies expense for the same amount. So this is B. Okay, the same amount is 2175. I'm just going to copy it. Okay, or equals. So copy it 2175, and I need that for here. Nope. 2175. Okay, so let's debit supplies expense. Supplies expense for 2175, and we credit supplies for 2175. Now let's post. Okay, this should be our very first supplies expense, and it's going to be July 31st. Post reference, this is page 3 of the journal, and it's 2175, and then close it and go to supplies, which is an asset, put in the date. Okay, so let me look at my supplies account. So it already had, so here's, okay, hang on, I'll recreate this one. Just a minute. Okay, we had July 1st, page 1. We had 3,100. And this is an asset. We bought some more. So see, this is helping me again. So number 12, $600. So this should be July supplies. July 18th, page 2, $600. So then we had $3,700. So now it's July 31st. And how much do we want it to be? We want it to be $1,525. That's what they said it was. So to make that happen, we have to credit, and this is from page 3, 2175. So if you take this number plus this number minus this number, you should get 1525. Let's check the work for this particular one. Let me make this a little bit smaller. Okay, so let's see if we got it. I think so. Okay, those are our two adjusting entries we have journalized. So, yep, that's good for supplies. Okay, that is good for supplies. And then supplies expense, which is down here, got 2175 there. All right, so we've posted those. Okay, back up to the journal. I'm going to close these. You can close them all once you've opened them by checking your work. Just close them all by hitting the arrow next to cash. All right. we're now ready for our number 3 adjusting entry. Let's try to pick up the pace a little bit. Depreciation on office equipment. They're going to give us that amount. It's $750. Okay, so we want depreciation expense. Here it is. So this is going to be C. The amount is $750, and the credit goes to accumulated depreciation. Here it is, right? It's $750, and that is C. Okay, that's C for the transaction. So now let's record this. So depreciation of office equipment. So I'm going to go up here and get that title because, okay, it's just this depreciation expense. Sometimes they put it specifically to an asset. So they didn't here. That's okay. They said it's $750, and then accumulated depreciation, which I don't want to type all that. Accumulated depreciation. I guess we only have one fixed asset, which is office equipment. So it has to go with that one. But if we get more than one fixed asset, we'll want to designate each one. So now let's go and post. Okay, so depreciation expense, which shouldn't have any in it, gets an adjusting entry on July 31st from page 3 of the journal. And the expense is $750. And then that means the balance is now $750. Okay, and then we want to close that. I want to make this a little bit wider so we can get all of that on there. Okay, and then, I forgot to put in my account numbers. I'll get those here in just a second. Okay, so that should be okay. So we're going to close depreciation expense and go up to accumulated depreciation. Put in July 31st, post reference page 3, 750, 750. Okay, so once again, these are adjusting entries to bring the balances of at least one balance sheet account and one income statement account up to date. And now I need to put in the account numbers. Okay, so depreciation expense is 54 and accumulated depreciation is 19. So let's take care of those two, 54 and 19. And now I need my supplies expense, which I forgot to do. I'm sorry. Number 53 and supplies is number 14. So 53 and 14. That, once again, posting this number here is supposed to be the sign that journal entry has been posted. Okay, another adjusting entry. This one is accrued. Accrued means to record an expense or record a revenue that we haven't paid yet. So we're going to put receptionist salary of $175. We're going to put that in a salary expense. Okay, so, and then we're going to put it in salaries payable also. So let's go to salary expense. And this is going to be D. Okay, so the amount they said was 175. We're going to put that in salaries payable. Okay, so that is a liability of 175. So there was maybe a day in July that they need to pay her, but it went into it. They haven't paid her yet, but the time period is in July, but she'll get paid for it probably in August. So this is D. Okay, now let's record this. So salary expense. Salary expense, which we'll come back to 175, and salary payable salaries payable. Okay. Okay, one salary and one salaries. Picky. All right, so now let's put this in the ledger. So salary expense, and that's the think. So let me look at my, see, this is why it's so good to have these. So salary expense has actually got 2175 in it. Okay, so B. No. Oh, wait a minute. I'm in the wrong account. Look, supplies expense, salary expense. Whew. All right, I've got to add this to now. So I've got to add this to salary expense. So this is going to be D. Yep, D gets 175, which is going to change this. So let me go ahead and put this in here. So back to our other ones was July 14th, page 1. We debited for 1750. Okay, and that became the new balance. And then we did that again on number 16, which is July 27th. July 27th, we paid her again. Okay, which brings the new total to 3,500. And then here comes an adjusting entry to accrue $175. So now we have $3,675 is the new balance in here. So if I want to just put that in, that's fine. So we can add that up in the T account. And there it is. Okay, so let's check the work. And then we got to go to salaries payable. Okay, salaries payable. What's this one? Oh, I hadn't. It's gonna drive me crazy not having this in here, but that's the way it goes. I may end up doing it. So prepaid rent, prepaid insurance. Okay, had prepaid insurance. That is, when did we do that one? That's number 3. And that was July 2nd. Oop, that's not what I want. Number 3. So this should be July 2nd. Page 1, 20 or 4620, which becomes 4620. And then, I wonder what. Okay, and then we have a new total. Okay, and we made prepaid expense go down. 385. 385? Yep, I keyed it in wrong. 385. All right, so now I'm going to subtract 4620 minus 385. So this has now got 3935. Okay, so now we have 3935 here. And we do the math here. So this is like keeping a ledger somewhat. 32. $46.20. Okay, that's not true. So let me do it again. 46.20 minus 385. Yep, it's 42.35. So this helped me realize that I didn't calculate this right. Yep, 42.35. There we have it. So I think that's okay. Yeah, that's good. Okay, and then Yeah, I've gotten off track here, haven't I? Yes. So we were last working on accruing a salary. We need to go salaries payable. Okay, salaries payable. There's the cash. Salaries payable for, okay, July 31st, page 3. And that's going to be the 175, and that's going to cause a $175 balance. So, yep, there it is. B. Okay, now we're going to put in the account numbers. So, all right, so salary expense and salary payable. Salary expense is 51, salaries payable is 22. So 51 and 22. Man, all right, let's keep going. So July 31st, E, rent expired during July, $3,000. So we have prepaid rent up here. Yep, prepaid rent is right here. All right, so the amount that expired is $3,000. So this now has a new balance in it of $3,000. Mm-hmm. And when we credit this one, we're going to debit rent expense. Rent expense. So this is going to be E, $3,000. So this is E as well. Okay, now let's put this in our journal for the adjusting entries. So we want rent expense for $3,000 and prepaid rent $3,000. Let's go to rent expense ledger. Okay, rent expense ledger. Okay, July 31st, page 3, a debit of 3,000, which means the balance is now 3,000. Let's go up to the prepaid rent account. Yeah, prepaid rent. Let me put in what should be there. It should be $6,000 on July 1st. So July 1st, on page 1, we purchased 2 months of insurance. No, 2 months of rent. Sorry, 2 months of rent. Okay, now it is July 31st, and we want to show $3,000 of that rent has now been used. Okay, so there's now a new balance of 3,000, so that should be correct. Okay, and then we want that rent expense down here, 3,000. All right, now let's put in the account numbers to show that we have posted. So the account numbers are 52 and 15. Okay, 52 and 15. Okay, we got one more, 52 and 15. Whew. All right, 52 and 15. Last adjusting entry, July 31st. It says unearned fees. So we have unearned fees. The balance in unearned fees on July 31st. So let's go to this unearned fees. So we need to create a balance in here that's different than what this is showing. So that is supposed to be $2,500. Well, you've got to make an entry, a debit entry here for $2,500 to go from 5,000 to 2,500. And this is F. So if we debit unearned fees, we're going to credit fees earned. Okay, fees earned. And I have to scooch these down just a little bit. Okay, so we've got E here of $2,500. So we now have a new balance in fees earned of $44,500. So there's that. So let's go ahead. So let's we're going to debit unearned fees because we earned them. How do we know we earned them? Because they gave us the new balance in it. Okay, so the new balance was 5,000. 5,000 was the unadjusted trial balance of unearned fees. They said it should have 2,500 in it. That means we need to take out 2,500. Okay, so then this becomes fees earned, right? So when we have customers or clients that pay ahead of time, we can't show the revenue until we do the job, right? So now let's go down to these ledgers, unearned fees. So unearned fees is a liability, which is sometimes hard to remember. It's a liability, and it had 5,000 on in it, and that came from number 4. So I didn't put a 4 over here, and I should have. So let me put that there because, wait, unearned fees. Okay, unearned fees. That was number 7. Sorry, number 7. Sorry about that. Number 7. So yep, that jives with what I have here for cash of 5,000 coming in. That might be that one. Number 4. Nope. Nope. Hang on. Let's go. 5,000. That's correct. That's correct. Hold on. This is correct. This needs to be 4. So wherever I put a 4, anywhere else has a little tick symbol. Okay, 4, 7 was advertising. Okay, 7 was advertising. So that's okay. All right, so back to where we're at. Be careful. Let's go back. We've got to put the journal entry in now for our very last adjusting entry. We already did. So now we're headed down to unearned fees to put a debit in of $2,500. I still have got to make this smaller so we can see it. Okay, so unearned fees is a liability. Fees is a liability. Okay, we want to debit it. Unearned fees. It ought to be right here. So when we created this should have been July 4th, right? July 4th. Yep. From page 1, we've got $5,000 in cash that we didn't do a job for. But when we start to do a job, so here it comes, July 31st, here comes an adjusting entry, 2,500. Now this is down to 2,500. And that's what our unearned fees says here. So we have unearned fees right here, and it has 2,500 in it. All right. So that's good. And then we want fees earned gets another credit. And I don't have all those in there. Okay, so fees earned. Woo, I think it's going to be this one because we need one to. So fees, so this is page 3. We're going to do 2,500. And now the new balance in fees earned is 44,500. So this had 42,000 in it. let's see, wait a minute. Okay, nope, above here would have been 42,000 here. Okay, then we added to it. So now the new balance is 44,500, and we're waiting because this last line will be to close this. All right. So I think we have our, all right. So now I want to get the spreadsheet. Okay. I want to get the spreadsheet and I want to, okay. So let's check this and see. Oh, we have not put the account numbers. So this one is 41 and unearned fees. We'll start with a 2. That's 23. Okay, so we got to put that in, and then we should get the full 42 points if we did it right. Okay, so my prepaid insurance, okay, that's not the right number. So it is 16. Okay, I misread it. All right, 16. Now I think we're good to go with putting in our entries. You should get 42 out of 42. All right, so now I'm going to put these amounts in my spreadsheet. Okay, my spreadsheet. So I'm going to make the T accounts rest a minute. Here's my spreadsheet. So I want this to put this beside it. And now we're going to enter in which direction each of these, if it was a debit or a credit. Okay, and we're going to put that in this spreadsheet. And when we're finished, we will add or subtract it to get a new adjusted trial balance. And then we'll have to put that adjusted trial balance in. So let's start with accounts receivable. I don't think there was an adjustment to it. Okay, so let's just start with insurance expense. Okay, let's just go down the list or you'll skip something. So insurance expense got a debit of $385 and prepaid insurance got a credit of $385. Okay, so that's showing that. Then supplies expense got a debit of $21.75 and supplies went down with a credit $21.75. Okay, depreciation expense gets $750 and then accumulated depreciation gets the offsetting credit. Salary expense, so yeah, there's a lot going on here. Salary expense gets an extra $175, and then we have a salaries payable that gets a credit for that. Okay, and then I have $3,000 for rent expense. Okay, and then prepaid rent has a credit to make it go down 3,000. And then the last is unearned fees. We earned some of them. So to earn fees, we're going to get rid of 2,500 and we're going to show those fees went up as a credit to fees earned. All right, so 1, 2, 3, 4, 5, 6 debits. 1, 2, 3, 4, 5, 6 credits. Do we balance? Yes. Now we're going to put this adjusting entry in. So we're done with the journal, but then we're going to need it for closing. That's okay. So now let's go up and highlight the adjusted trial balance. Okay, so now be careful. We've got to do a little work before we start putting anything in the adjusted trial balance. I think they've already got our accounts in here for us, which is nice. Okay, here's what we got to do before we put the numbers in. Be careful. Okay, there was nothing adjusted to cash or accounts receivable. So here's what I'm going to do. Equals. Because this is a debit, I'm going to go here and I'm going to add if it was a debit, subtract if it was a credit. Okay, now you can only do that formula for anything that has a debit normal balance. So I'm going to drag this down. Okay, anything that has a debit normal balance. Okay, so be careful. This isn't going to work here. Okay, it's not going to work there. And it's not going to work there. So take it out or just put 0 there. Okay, so if you get any negatives, just put 0. Okay, because you're actually going to get, all right, so there's that. So now we're going to do it again. So what we're going to do here for this one is, since we already have a debit balance, we know that. So what I would do is just put zeros here. Okay, now I'm going to do a formula. Equals credit over here plus, be careful, credit minus a debit. Yep. Now, if you don't understand that, that's okay. But you do need to understand that when you take a 0 credit and add 750, then you have 750 in. Now, I'm just going to drag this down, kind of like I did with, and then I'm just going to put a 0 in where I get negative numbers. Okay, negative numbers. All right, common stock is good. All right, so this can't have both. So unearned fees, I got to take that out and put a 0 in. Okay, so this is coming from, yep. So we don't have as many credits that are calculating as we do debits. But if you don't understand that, then you're just going to have to add across. So you add, if there's nothing sitting here, you just bring that total over. Bring it over, bring it over, bring it over. But if you have something sitting here, you have to see if I have a debit normal balance that gets credited, that means I got to subtract that one. If I have a, let's see here, if I have a debit here against a normal balance of a credit, that's going to subtract. Okay, so you do have to watch what you're doing. And then we do balance. Okay, and so now we're going to take these numbers and feed them in to this adjusted trial balance. Make sure you're on the right one. I would push everything over. Okay, so cash did not adjust, and neither did accounts receivable. Okay, supplies did. Prepaid rent did. Prepaid insurance did. Office equipment did not. Accumulated depreciation had an adjustment. Accounts payable. Salaries payable was part of the adjustment. Unearned fees are now $2,500. Common stock did not get adjusted. Retained earnings is still 0. Dividends have $12,500. Fees earned have $44,500, and the rest of these are expenses now. Okay, $36.75, $3,000, $21.75. Depreciation expense, $750. Insurance expense, $385. Miscellaneous, $14.50. Now I get to use what I just did here, which is nice. I don't have to okay, so I don't have to, come on. Why is that not going around there? All right, hang on a minute. Okay. When you see a double line like that, see how you see a little double line? That means that is a total in Excel. All right, so now I'm going to put in what it looks like my adjusted trial balance is, and then we're going to get ready to do financial statements. Okay, we're going to do financial statements. So it looks like this is good. So 21 out of 21 for your adjusted trial balance. Okay, and I've got this over here now. Now, these are the numbers we're going to use to create the financial statements. Here is your income statement. Okay, and here are all the expenses that are involved. And then here's your balance sheet up here. So now I'm going to make this adjusted trial go away. I think. Let me see what all I can get rid of because I need to do the financial statements now. So where we're at with our instructions, right, is we made it through that. Now we prepared the adjusted trial balance. So we've made it through step 7. Now we're going to do an income statement, a statement of stockholders' equity, and a balance sheet. After those are done, we'll do the closing entries and do the post-closing trial balance, and we'll be done with this darn thing. So here's one thing you can do. When you're doing this spreadsheet, these should equal, so the income statement is right here. Okay, it is right here. So you could make this equal what this is right here and just pull it down. So now you say, but it doesn't balance. Yeah, that's true. Look what this will be. This says net income. If we find the difference between those two, then we will have net income, right? Yep. And that's what this spreadsheet is kind of designed for, is to help you see it better. So one more time, if we take our credits and subtract our debits, then we have 33,065. And now we should balance, because that is the amount of net income. All right. Do we balance? Yes, we balance. Or I'm sorry, we balance. Our income statement balances as far as the, now then you go over and you'll get 2 more columns for your balance sheet. So now what you want to do is you want to take both of these equals, let's see what we can do here. And we want these down to, okay, I got to highlight it just a second. So I'm going to highlight all of this down to dividends, okay, equals, and then I'm going to go back over here and highlight this down to dividends and hit enter. Okay, that moved those over there. So these 2 columns are for your balance sheet. Do they balance? No, but ironically enough, the amount we found in net income, right, which is what we want it to be right here, is that. And then now when we balance, it should balance because we're going to add up both of those and cancel. Okay, so then we just want to bring this over. So we now balance. Okay, it's good to go ahead and do this because this will help you with what accounts go on the income statement. All right, so I am going to get rid of the instructions, I believe. Wait. Nope, nope, nope. Here's something we need to make sure there's not any information about additional common stock or anything like that up here in the instructions. And I don't see anything, but let's go to the income statement. Okay, we're going to the income statement. All right, so let's go down here to the income statement. The income statement is always for a period of time. And it, what, oh, there's that 385 that I screwed up. Wow, 385. So it was waiting on me to fix it. That was insurance. So I think we're okay now. Let's see. Yeah. Okay. So now we're ready for the income statement. Now we want to label. So we're going to get rid of some of these so we can work a little faster. So I want to get rid of the instructions. I do need the labels. I'm going to get rid of the ledger because we've got our numbers over here. And I'm going to get rid of the general journal. All I want is the chart of accounts, the labels, and the income statement. So the income statement is for a period of time for the month ending. I'm going to copy that and bring it into my income statement. Okay, the first account is fees earned. And you can either put in the labels, let's put all the labels in first. So after fees earned on an income statement, we usually need some kind of a label that says expenses. There it is. So expenses. Okay, so now we're going to put in our expenses and what are they? So if I look at all I'm looking at is right here and I'm moving it over. So here is my income statement right here. So the first one, I'm just putting in the titles, the labels, salary, expense. Okay, let's go put the next one in. Then rent expense, and then supplies expense, and then depreciation expense, and then insurance expense, and then miscellaneous expense. Okay, and then an amount description, and then we have net income. Okay, we do have net income. Now we found net income to be what? Right here, 33,065. So I'm going to put that in because I already know what it is. Okay, so fees earned 44,500. Salary expense 3675. See how helpful this is? Yeah, right? How helpful is that? Nice. All right, so rent 3,000. Supplies 2175. Accumulated depreciation. Insurance expense 385 and miscellaneous 1450. So those add up to right here. Woo, that's nice. So 11,435. And if we check our work, I think we'll get it. What am I missing? I'm missing total expenses, probably. Total expenses, yes. Total expenses. Got too excited. So, all right, total expenses. Yep, now we should get our full 20 points. Voila. Okay, we're going to need that number for the statement of stockholders' equity. So I'm going to get rid of the income statement. Statement of stockholders' equity. It needs for the month ended July 31st as well. So I'm just going to pick that up when I go down here. Okay, we need the beginning balance. Okay, balances. So we need these two. Let's just grab them. That goes in the top row and the other one goes in the bottom row. So we want to begin with the balances in the first of the month. We're going to end with the balances in the last of the month. So at the first of the month, we had 0. So put 0, 0, because this is the first month of business. The first one was that we issued common stock for the owner bringing in those assets. We issued the common stock. Common stock is 44,900. So now we want to kind of look at some of this. So 44,900. Okay, and then we want 44,900 down here. And then we want net income here. And that goes over here. It is $33,065, and you need to bring it over here to the side as well. So retained earnings is not affected by common stock, but together common stock, which is called contributed capital, net income affects retained earnings, and then dividends. Okay, dividends were 12,500. Oh, we don't want that there. Sorry about that. That's a zero. I think we put this in as a negative. All right, so our retained earnings, okay, we started with, or we didn't start with any, right? Our first retained earnings is going to be the net income that goes there, but then we're going to pay out some dividends. Okay, so our retained earnings got 33,065. That is the net income. So over here to the side, I'm just gonna, I'll just do it down here. All right, so let's just put 33,065 minus 12,500, and we get a new retained earnings amount of 20,565. Okay, so then we need to add these three also to see what we get. So 44,900, 33,065, and subtract 12,500. We're going to add those three together. And when we add across, we should get 65,465. Let's just check it and make sure it's working. Yep, it is. So you got 18 out of 18. Now you're going to need these numbers. So this is retained earnings. Yep, this is retained earnings. So don't lose what that is. You're going to need that for the balance sheet. Retained earnings. This is total equity. So we're going to need that when we put together the balance sheet. All right. And so we'll leave it open. Let's go get the balance sheet. Now the balance sheet is going to need the 1 day in time. Okay. 1 day in time for the old balance sheet. We'll leave the stockholders' equity statement open. Okay. Here we go. So our first asset is cash. Our second asset is accounts receivable. Okay, and then all we got to do is go up here and look at these, right? We're just going to march down the list there. The spreadsheet that I'm looking at in Excel is in what they call financial statement order. There is the order that we want to list those assets in liquidity order. Okay, so then we have two prepaid rent, prepaid insurance. Then we have office equipment. And we're just listing the assets all together. We're not doing current versus long-term. And then accumulated depreciation. Accumulated depreciation. We didn't get that. Okay. Wait a minute. Hold on. What's this one? This one might be a label here. Hold on just a minute. Yep, that's a label. So hang on. Let me get these out of here. I got too excited. So they do break up assets into current and long-term. So sorry about that. That's all right. So let's put our labels in next before we start putting accounts in. Yep. So if you need to look at a balance sheet, which I highly recommend, I've got Morning Joe's there in the Canvas module. So I would recommend using that. Okay, assets. Current assets. and current liabilities. Those are labels. And then we will use totals when we get down at the bottom. So let's put these in. Current assets, current liabilities. And then we want current liabilities. Let's get that out of there. Put it here. Okay, we want PPE or property, plant, and equipment. That's going to be where our office equipment goes. So they do break it up. That's good. That's how it's supposed to be. Okay, now we can start going. So cash, accounts receivable. Oops. Okay, and then we have supplies and our two prepaids. Prepaid rent, prepaid insurance, and total current assets. Okay, so we want to total these right here. A good way to do that in Excel is if you highlight whatever you want right there, I can now look down here and see, oh, it's 56,690. Isn't that cool? So I am going to put that in there, 56,690. So I'm going to go back and then fill in what they are when I get finished with a section. Boy, that spreadsheet comes in handy. I wish I would have had that when I was learning this. Somebody got wise. All right, so now we're going to do office equipment. And then the accumulated depreciation. Okay, so accumulated depreciation, if you want to get its, okay, copy, let's put that in. Okay, so, and then we're going to subtract that, and then there's going to be probably, let's see what they say here. Total property, plant, and equipment. Yep. Total property, plant, and equipment should be right here. Yeah. Okay. So let's see. Our office equipment has 13,500 in it. We did put in $750 of accumulated depreciation. Are we supposed to put in negative numbers? Must enter subtracted, use a negative sign. Okay, well, I've been saying that all along, but there was a time that you never saw negative signs. All right, so 13,500 minus 750. Okay, 13,500 minus 750 is 12,750. And then we have total assets. Total assets, here's half of the balance sheet. So we're going to take the total property, plant, and equipment, and we'll add, so we get 69,440. Okay, 69,440 for assets. And if we added up all of these and subtracted this, we could find out, but I'm pretty sure that's what it is. Okay, let's go down to our three liabilities. Accounts payable. Okay, accounts payable has 1,300 in it. Then we have salaries payable. Salaries payable of 175, and then unearned, we have some unearned fees of 2,500. Now we have total liabilities. Okay, so if we add up just the three that we have there, right here, don't include this one because that's a contra asset. So we want these three added up. I got $3,975 for total assets. 300, wait, let me do it again. $3,975. $3,975. Now we're ready for stockholders' equity. Here's what's cool. Let's just start at the bottom because this is half of our balance sheet. So guess what the other half has to be if we're right? We could be wrong. We can fix it. So now let's go up here and put total liabilities and stockholders' equity as that bottom piece. There's nothing wrong with putting that in last. You can kind of work your way backwards. All right. So then our stockholders' equity, right, is going to be common stock. No, yes, common stock. Okay, so common stock is 44,900. Yep, and let's look down here. Retained earnings, 20,565. Okay, retained earnings, 20,565. And then we have total equity, total stockholders equity. And we know what that is. It's 65,465. Okay, all right, let's see. Pray, pray, pray. Okay, yep, we got it. How many do you need? 40 out of 40 to get the balance sheet. Now we're ready to close. Okay, we are ready to close. So what I'm going to do is I'm going to I got to go back to the general journal. We'll do the post-closing trial balance in a minute. Let's go to the general journal and the general ledger. Let's get rid of these and these and these and these. Yep. We're going to use the T account. And so we're going to save this. And just in case I need it. And then I want to get that T account back open. All right. So the closing process. You close all revenues. Okay, so we're going to do a journal entry here. So to close a revenue, go up here. Here it is. Here's how much this account has. It has 44,500. How are we going to close it? We are going to close it by debiting it for how much is sitting there, right? So here comes the closing entry, 44,500. Put that in first. And by the way, this is July 31st. Okay, and nope, that's the wrong one. Let's go down to the one that says closing. There's our adjustments. Now we're on the closing part. Okay, closing part, July 31st. We're okay. So we'll the entry that we're about to make, we need to account for in the ledger. All right. So this is going to be a debit of 44,500 to fees earned. Yeah, fees earned. Okay. And then don't worry when we get finished. All right. So then we're going to use all of our expenses. So the next one is salary expense. And we're going to credit it to close it. So whatever's sitting here needs a credit to it to close. Okay, so I'm going to put a C for close, a big C, right? There's a big C. So to close that one, we need $3,675. Then we need rent expense to close. Why are we closing these? Because we're finished with July. And if we don't close these, we don't know where July ended and August begins for our revenues and our expenses. So, and our dividends. Okay, so we're going to credit supplies expense for $21.75. So this gets a $3,000 closing credit here. This one gets a closing credit here. So that's C. This one's going to get a closing credit here. C. And then this one, I think that's 385. Yeah, 385. Just continues to haunt me. All right, so let's put these all in now. And we can see it happening here. I may not worry so much about my ledgers, but we'll see. But you'll want to put we'll want to post these to the ledger. Okay, my ledgers are messed up. But all right, so then we did supplies expense. We want depreciation expense, a credit of $750, insurance expense of $385, and then we have miscellaneous. Yeah, we can't forget it. So it gets that. Okay, so miscellaneous, that kind of gets forgotten about. And it gets a credit. Okay, yep. A credit of $1450. Now, net income. Net income goes to retained earnings. It gets a credit. Remember what our net income was? Okay, so if you forget, you can go back to the spreadsheet. Net income, $33,065. I'm going to put that right here. $33,065. It's going to retained earnings. Okay, so that is that one. I'm going to go ahead and do the other one now. Then the last one is simply closing the dividend account. So back to, so dividends is there it is. So it has a debit balance, so we need to credit it, right? Yep, C. Okay, and oh, I forgot to do, okay, so the retained earnings is going to get 33,065 for closing. And then it's going to get 12,500 for closing for here, right? So then this is going to have a new balance in it, which should match what we put on the balance sheet for retained earnings, 20,565. Yep. All right. So let's go ahead and put this in. This is going to be retained earnings. We're getting rid of the dividends. So if we do dividends again, it'll be 0. And then dividends is what we will be dividends. What we're going to be crediting. Okay, now we're going to post these. Let's check them. Now, these aren't in yet, so that's okay. So now fees earned, right? If you go to your ledger, and I want to close them. So we only want to mess with you. I'm just going to show you. I'm not going to do it because my ledger is messed up. Okay, so we need to post all of these things. We need to post them. So I guess I can just show it to you, but mine's not going to be right. The last thing is to get rid of what's in the revenue. So July 31st, page 4, and it's going to be, so all you got to do is look at fees earned. There it is. So it's going to be a debit of 44,500. So this is going to have 0 in it. Okay, that's what it's going to do. And then for each expense, you're going to do the same thing, except on the other side. So 31, page 4, it's a credit of 36.75, and then there's a zero, but we want a zero on the debit side because expenses have a debit normal balance. Close it. Go to rent expense, same thing. July 31st, page 4. We're going to credit it so that that account has zero in it. Supplies expense. Okay, July 31st, page 4, credit it. Whoop, whoop, whoop. 2175, it now has a zero. Okay, depreciation expense, July 31st, page 4, credit of 750, now has zero in it. Two more. So we are posting to make these accounts have zero in them, which is what we want to begin August. So miscellaneous doesn't have anything because I didn't put that in there, but it would have 31, page 4, a credit of 1450. And then a zero. Okay, now mine's going to be messed up, but you want 276 when it's all said and done. Okay, 276 when it's all said and done. So all of these have zero. Okay, yep, you've closed them all. I'm not going to get very good scores because my ledger's messed up. Now I'm ready to do my post-closing trial balance because we've posted all of the closing entries. Okay, so the only ones we need to report are the balance sheet accounts. Okay, so let me go up here to the top. We're almost done. Oh my goodness. Okay, we got a little bit more to do on the other one. So let's go to the post-closing trial balance and get rid of everything else. So your ledgers do need, because you got to save yours and I didn't. So the cash, okay, but I've got it in my T accounts, thankfully. So here is what I'm going to put. I want the balance and then the balance in accounts receivable, which is 16,850. Supplies has 3,700 in it. Nope, nope, nope. 1525. Yep, I gotta watch it. Okay, prepaid rent, 3,000 in it. Prepaid insurance, 4235. Office equipment, 13,500. Accumulated depreciation, 750. Accounts payable, 1,300. Salary payable, 175. Unearned fees, 2,500. Common stock is the next one. Common stock is the next page. Common stock didn't get touched as soon as she made that investment. Retained earnings. We didn't know anything about retained earnings. Now we have 20,565. Okay, and I need a total. So I'm going to go back to my spreadsheet here and see if I can't get something here. So what is the total of this? So all of these add up to 70,190. Yep. 70,190. That's nice. Okay, now retained earnings doesn't have its fix in here. So you can't get too crazy. If you add up this, you'll find out that, wait a minute. Okay, no, dividends have been accounted for. So right now, this is 49,000. So add up the debit side, and then you should have it. Okay, you should have it. So, and I know the debit side had the dividends in it, but if you took out the dividend, took it out, whoop, whoop, take out the dividend equals. Oh, it won't let me. Now that's crazy. Okay, well, anyway, there it is. There it is. Add up your debits, and that's the end of it. Okay, that is 14 out of 14. Now I know mine isn't showing closed, but I'm stopping there. Okay, and then we are going to do, I'll help you with the entries on this one. I'm going to let you work mainly on, so the next two come from chapter 5. Let me exit and go into another video. Okay?